Hey guys, how are you? Andy Suku, founder and CEO of Y2K Credit Solutions, consumer credit expert. Been in the industry over 22 years now, 23 years. Um, Great topic for you guys today. This topic again comes from one of our followers, and we're just gonna dive into this topic. And this is a really good topic, and I'm glad they asked this question because every single day when we speak to one of our clients, if you speak to five new clients, four of them are in this situation, and the question came in, hey, I'm in an upside down auto loan. How do I get out of it? Right? And that's a great question. And before I answer that question, I want to talk to you guys about how you have got into that situation and why you got into that situation. And there's a lot of people on social media promoting these banks, these subprime banks. This video is gonna be long, by the way. So in the credit card space, in the auto loan space, there's prime banks and there's subprime banks. All right. So subprime banks are like Ally, Santander, Chrysler Capital. There's like 4 or 5 subprime auto loan banks, Capital One, right, and the list goes on. And this is in auto loan. And in prime banks, there are your in-house financing for your auto loans. Just like in credit cards, there is your Chase, Citi, Discover, Barclays, Amex, Bank of America, and prime banks. And in subprime banks, there are your Capital One, Credit One, First Premier, Community Bank, Bank of Missouri, the list goes on. So this is a great question when this client asked me, because I'm like, wow, this is going to be a long video. And I really want to dive into this topic for you guys because it's a lack of education on how you get into the situation. So first, let me tell you how you got into the situation. When you went to apply for your auto loan, first off, you didn't know what your credit scores were. You probably didn't check it on the credit monitoring app, you just went to get the auto loan. Right now, whether you're buying a new car or a pre-owned car, you went to the dealership and you probably couldn't get in-house financing. And I'll talk about in-house financing in a few minutes. You couldn't get in-house financing, so the bank ran your credit to every subprime bank that was going to take the loan. Now, a couple things happen in this process when you go to a subprime bank. One, whichever bank takes the loan, what you don't know, right, is that if your interest rate, if the bank tells you your interest rate is 16%, or the dealership tells you the rate for this car is going to be 16%, what they're not telling you is that the rate is actually 15%. But because the dealership is sending the loan to this specific bank for the business, giving them the business, the bank is going to give the dealership back a point for sending the business to them. Now you can negotiate that rate, right? So even for prime banks, you can negotiate the rate too, but it happens more so on subprime banks. So this is what happens. So when you go apply for an auto loan, right, you always want to make sure you check your credit before you go in. If you have any stains on your credit needs to be touched up, you need to pay some credit card balances down. Do so before you go apply for this auto loan. One, you're going to avoid 10, 15 increase on your credit report. Two, you're going to get in-house financing. Three, you're going to get the best rate on the best tier that they're offering for that month, right? So a lot of dealerships have promos. Well, not so much now, so because of the car market, but normally they have promos. So make sure you check your credit. Make sure you have all your issues resolved, balances are low, under 30%. Then go apply for that auto loan. When you apply for the auto loan, if you have a 720 or higher score, you're going to be qualifying for in-house financing. So what is in-house financing? And let's say you want to buy a BMW, you want to buy a Lexus, Mercedes, whatever your choice of car is, you want to get Mercedes financing, BMW financing, Toyota Motor financing, right? That's in-house financing. That's where you're going to get the lowest rate and the best terms right off the back. Now, if you go and your credit is not so good, you don't have favorable credit, and your scores are in the mid 600s, even low 5s, always remember, a subprime bank will take your deal at any given time because it's a collateral. If you don't pay it, they'll come repossess the car, right? And of course, they charge these high rates. So now you can't get approved for in-house financing. The dealership is going to send that loan to 10 different banks outside. One of these banks will take it, right? They're going to make you pay a higher down payment for the car. Of course, you're gonna have a higher rate and so forth, right? That's subprime bank, and that's where you don't want to be at. Now, to answer the client's question, how do you get out of it? First, let me tell you how you know that you're in a subprime bank loan and you're upside down. This is how you're gonna check this. You're gonna go apply. You're gonna get a credit monitoring app, Score Navigator. We provide that information in Score Navigator for you. ScoreNavigator.com, promo code Y2K Credit 10. Sign up for it. You're gonna see your whole credit report. You're gonna see your auto loan. This is how you're gonna do the calculation. Look at the open date when the loan was open. Look at the amount you took out. We're gonna use basic numbers. I'm making the numbers up. Let's say you got a loan for $5,000. You got it in 2020, right? What's today? April 2020. Took out a loan for $5,000. April 2023, you still owe. We're 23, right? So April 2023, you still owe $3,000. Your monthly payment was $100, right? So in April 20th, April 2020 to April 2021 is 12 months. 22 is 24 months. And 23 is, what, 36 months, right? That means you've paid $3,600 on that loan already, right? $100 a month. We're using basic numbers. Then how do you still owe $3,000? You should owe somewhere around $1,800, $2,000. That's how you're going to calculate you're in an upside down loan, because you owe almost the same and you've been making payments for 3 years. All right, that's how you're going to calculate it. Also, I'm telling you, if you're in one of these banks, Ally, Chrysler, Santander's, if you're in one of these banks, you're an upside down loan because they're subprime banks. That's what they set up to do, right? So next, how do you get out of the situation now? There's only two ways, actually. One, because the used car market is high right now, you try to sell that car to a dealership or CarMax. You may have some negative equity. Do not roll negative equity into a new loan, because you'll be right back into the same situation that you're in right now. Either you try to sell the car to CarMax, Carvana, one of these guys, and hopefully get the max out of it. Make sure you clean the car, make sure you detail it, make sure it looks sparkling, brand new, as much as you can, so you can try to get the max value. If you can sell it and you get out of it completely clean, great, right? If you can sell it and you have to pay a little bit of negative equity, you may have to bite the bullet. The other option is to fix your credit, get your credit up to 730, 740, 750 credit score, open an account with a credit union and refi that car into a credit union. One, you're going to get a better rate. Two, you'll either keep the same term that's left, or you can shorten your term because you'll have a better rate, so your payments will be a little less, so you can actually afford to double up on the payment. Or, here's the thing, if the car's not worth it, the loan to value, auto loans use loan to value, so credit unions are going to use the loan to value. If the loan to value is not there for the car, the credit union is not going to refi it. So you got to hope that this car is not so deep on the value that you're stuck with it. But it's very hard to get out of a loan that's upside down if the loan value is very low, right? The third option, really, it's not really an option. It's if you have no choice but to, is do a voluntary repossession. If you're gonna have to fix your credit, get rid of the car now, fix your credit one time, then fixing your credit, then having to have a voluntary repossession and come back and fix your credit again. But regardless of what the situation and what you choose, you never want to be in a auto loan that's upside down. Never, ever, ever. Especially if you're trying to buy a home and your debt to income calculation is going to be calculated into that, and your monthly payments, your DTI. You never want to be in an upside down loan. And I tell my clients, fix your credit first. Take care of your financial obligation, your past financial obligation, before you go into a new loan, because you're going to sink yourself. You're going to get yourself deeper into debt and you cannot get out of it. And you'll be stuck in this routine of always having negative credit over and over and over. You're going to be back in our office months after months after months. You know, our goal at my office is do things the right way one time. I'm not trying to do this again and try to fix a client's credit 3-4 times. I mean, it does happen. Some clients run into some issues, but do it the right way one time. This is a great question. I hope this kind of clarifies how subprime loans work. I never want to see a client in a subprime loan. It's just money going down the drain. But also, you have a lot of these Instagram gurus and social media gurus are, they're getting backings from these banks to promote their business, but they're promoting a business that's hurting the community, right? So you can't tell me you're doing this for the community when you're worried about your pockets and you're promoting these services that these banks are offering, but to yourself it's hurting the clients and the community long term. So how are you really helping the clients? So if you have any questions about this topic, drop a comment below and I'll try to answer it for you guys. But I hope it makes sense what I'm talking about. So talk to you guys soon.